Ladies and gentlemen, good day and welcome to Greenlam Industries Limited Q2 and H1 FY25 earnings conference call. This call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Saurabh Mittal, Managing Director and Chief Executive Officer, Greenlam Industries Limited. Thank you, and over to you, Mr. Mittal.
Thank you. Good evening, friends, and welcome to the Greenlam Industries call once again. I'm joined by Ashok, our CFO, Samad from the finance team, and SG, our investor relations advisor. I'm sure you all have had a look at the results which was uploaded onto the website and to the exchanges early in the day. So I'll just give a quick brief about how business has gone, and then Ashok will take you through the numbers, post which we'll be happy to respond to your queries to the best extent we can. So on the business side in Q2, you've seen we've done about 680 crores of revenue. I think considering the on-ground situation in both domestic markets and international markets, we've done reasonably well in both quantity and value. And if you go category-wise, if you look at laminates business, this quarter we've done our highest production and highest sales in quantity. The new plant in Andhra Pradesh in Hyderabad is also well stabilized. We've grown in both domestic and international market in quantity and value. And we believe with the information we have from ground, we have won more market share in both domestic and the international market. Clearly, certain geographies in international markets have done better than the others, and likewise in domestic, some markets have done better than the others. But by and large, our focus on domestic markets across the country, several international markets we've opened. We are seeding in markets to build business in a more meaningful way. So across categories of products and geographies, we are pushing and we are looking at winning more business and more market share. On the margin front too, if you look at the Q2, we have additional costs versus what we had last year in Q2, because the new plant was operationalized in end of September of 2023. So there is a bit of a higher cost at both the post-EBITDA in the interest and depreciation and in the cost in terms of people, resources, etc. Right? On the realization front also, we've been able to improve realization by a few percent, and we've been focused on both driving more volumes and consistently working towards driving a better value mix in both domestic and the export market. In the domestic market, we took a small price increase towards the middle of September. We raised domestic prices about 2.5 to 3%. Exports, we've not had any price increases as yet. Then coming to veneer and allied segment, there too the performance has improved. We've become a bit positive in the veneer and allied category. The flooring and door segment, we see decent traction now, and with the several real estate projects coming for closure or for fit-outs, we think the door and floor business will continue to do better as we move ahead. On the plywood business, the factory side is quite well settled. The feedback from the markets we're operating in terms of quality delivery is also quite strong. We have expanded, as we said earlier, into Maharashtra in the month of April. So we are now in the markets, all the 5 southern states and Maharashtra. So certain channel network is yet to be completed in Maharashtra, which we think should be done over the next 3 to 6 months. We did a price increase in plywood towards in July actually, and that was about 3.5 to 4%. We've also improved. That also helped us improve our realization in the plywood business. We're still away from achieving the desired results in plywood, but I think at the run rate we are going now, we think we'll keep improving as we proceed. in the ply business. On the particle board side, as we've been communicating, so within this quarter, we will be able to commence commercial production at the Andhra Pradesh plant. And the readiness in terms of teams at the factory, teams in sales, marketing, dialogues with channel partners, OEMs, is also going at a pretty good pace. So the teams are by and large well prepared to start the plant and also start selling and start marketing the products. So the preparedness to launch looks to be under control, and so that's on the particle board side. Yeah. So that's broadly from our side. We're not going too much macro data of housing and commercial leases and construction happening. We believe all that by and large looks quite positive, and most of the construction activities will need interior fit outs, and they'll spur demand for our categories and products in India. Globally, despite the challenges of slowdown, recession, etc., we think we still are in a good position to take more market share, considering our strength in terms of production capacities, capabilities, quicker turnaround time, slightly more cost competitive than the international players, backed up with a local team which work with customers at OEM, architects, ID. So I think from a strategic point, not much has changed. I think we continue to move in a certain direction. So I think broadly that's it from my side. I will have Ashok take you through the numbers and growth and percentages, etc. Ashok, over to you.
Thank you, sir. Good evening, friends. I'll take you through the financial performance for the quarter and for the half year. Consolidated net revenue for the quarter grew by 12.8% on year-on-year basis and grew by 12.6% on a sequential basis to 680 crore in this quarter as compared to 603 crore in quarter 2 last year. Gross margin grew by 20 basis points to 51.6% in this quarter from 51.4% in quarter 2 last year. However, on a sequential basis, gross margin grew by 40 basis points. Gross margin in absolute terms grew by 13% to 351.5 crore in this quarter as compared to 310 crore in quarter 2 last year. EBITDA margin was down by 50 basis points and stood at 12% in this quarter as compared to 12.5% in Q2 last year. On a sequential basis, EBITDA margin grew by 140 basis points. EBITDA margin was impacted in this quarter on account of new operational cost of new plants, which was not there in Q2 of last year. EBITDA in absolute terms grew by 7.7% to 81.4 crore in this quarter as compared to 75.6 crore in Q2 last year. Net profit for the quarter stood at 34.4 crore as against 39 crore in quarter 2 of last year. This is on account of increased depreciation and interest cost on the Naidupeta laminate unit and plywood unit. Now I'll move on to half yearly. Consolidated net revenue in the H1 grew by 14.9% from 1,285 crore last year. It grew to 1,285 crore as compared to 1,119 crore in last year. Gross margin was flat at 51.8%. Gross margin in absolute terms grew by 14.9% to 666 crore in this H1 as compared to 580 crore in last year. EBITDA margin was down by 120 basis points and stood at 11.3% in this H1 as compared to 12.5% in last year. This was on account of operational cost of new plants. EBITDA in absolute terms grew by 3.9% to 145 crore as compared to 140 crore last year. Net profit grew by 24.5% and stood at 54.3 crore in this H1 as compared to 72 crore in last year. This was again on account of increased depreciation and interest cost on the new plant. I will now move on to the segmental performance. In the laminate, in this quarter we had the highest production, highest sales in terms of volume and value. So laminate revenue grew by 12.4% on year-on-year basis and grew by 11.7% sequentially to 597 crores in this quarter from 531 crores in quarter 2 last year. Volume growth stood at 9.4% on year-on-year basis. Domestic laminate revenue grew by 15.5% on year-on-year and grew by 17.3% on a sequential basis in value terms. Volume growth stood at 13.8% on year-on-year basis. International laminate revenue grew by 9.6% on year-on-year and grew by 6.9% on a sequential basis in value terms. Volume grew by 3.9% on year-on-year basis. EBITDA margin of laminate stood at 14.7%, a degrowth of 170 basis points on year-on-year and a growth of 110 basis points on quarter-on-quarter basis. Production volume were at 5.61 million sheets at a utilization level of 92%. Sales volume for the quarter stood at 5.39 million sheets with an average realization of in this quarter at 1,070 per sheet. Move on to half-yearly basis. Laminate revenue grew by 12.8% on year in comparison to 1,131 crores in H1 last year. Domestic laminate revenue grew by 10.5% in value terms on year-on-year basis, and volume growth stood at 12.3%. International laminate revenue grew by 15% in value terms. Volume grew by 8.2%. EBITDA margin stood at 14.2%, a degrowth of 150 basis points in comparison to last year. Production volume were at 10.7 million sheets at a utilization level of 87%. Sales volume for this, in this H1 stood at 10.06 million sheets, and average realization in this half year was at 1,086 per sheet. And move on to another segment, decorative veneer and allied, which includes decorative veneer, engineered floors, and engineered doors. And revenue of decorative veneer business grew by 10.1% on year-on-year basis, and but grew by 65% on sequential basis to 32.4 crores in this quarter from 36 crores in quarter 2 last year. Volume grew by 11.7% on year-on-year basis. Revenue of decorative veneer business grew by 15% to 52 crores in this half year in comparison to 61 crores last year. Volume grew by 16% in this half year in comparison to last year. Sales volume in this quarter stood at 0.35 million square meters and in this half year at 0.56 million square meters. Capacity utilization in this quarter is 39% and for the half year stood at 29%. Average realization for the quarter was 929 rupees per square meter and for the half year stood at 927 rupees. I'll move on to now engineered wood flooring. Revenue for the engineered wood flooring business grew by 6.2% on year-on-year basis and grew by 5.7% on sequential basis to 14.1 crores as against 13.3 crores in quarter 2 last year. For the half year, revenue of engineered wood flooring business grew by 16.7% from 27.5 crores last year. So 27.5 crores in this half year in comparison to 23.6 crores in last year. Capacity utilization stood at 15% in this quarter and 14% for the half year. Moving on to engineered doors. Revenue of doors business grew by 39% on year-on-year basis and grew by 15.8% on sequential basis and stood at 11.4 crore in this quarter, as against 8.2 crore in quarter 2 last year. For the half year, revenue of door business grew by 39.8% and stood at 21.2 crore in comparison to 15.2 crore in last year. Capacity utilization for the quarter stood at 23% and for the half year stood at 22%. Now I will move on to another segment, plywood segment. Revenue of plywood business stood at 26 crore in this quarter and 53.6 crore in this half year. Sales volume for the quarter 2 stood at 1.02 million square meter on notional basis and 2.16 million square meter for the half year. Capacity utilization for the quarter and for the half year stood at 23%. An average realization for the quarter is 250 rupees per square meter and for the half year is 244 rupees per square meter. In the current quarter, our working capital cycle improved by 1 day to 59 days as compared to 60 days in the quarter 2 last year. Net debt stood at 992 crore, which includes a debt of approximately 477 crore on account of particle board project, which is under progress. That's all from my side. Now I will open the house for the question and answer.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sneha Talreja from Nuvama. Please go ahead.
Good evening, sir, and thanks a lot for the opportunity and congratulations on great market share in the domestic market especially. I just wanted to understand what are the trends that you're seeing in domestic market and reason for sharp increase in market share, especially what we are seeing in FY25.
So the question was about domestic market share, yeah?
Yes, sir.
So what do you wish to know? Can you just again?
So what are the reasons for increase in market share, especially in domestic market?
There's no one particular reason, but I think it's just consistent working, across the market, improved supply chain, better turnaround time, multi-location plants, one south, one west, two in north. The warehousing strategy we put across, the teams on ground, I think the better portfolio. I think it's a combination of multiple factors. I can't say just one particular thing in that.
What I basically just wanted to see is, we've been seeing strong market share in the domestic market and the laminate side, but we haven't seen some kind of, good performance, I would say, in case of plywood or be it, veneers, where, we used to do much, much better numbers in the earlier times, or be it flooring or doors. Is it because in those segments, you are focusing a lot on the premium end and laminates, you have launched a lot of medium end products, or I would say, compared to, your earlier premium end products, you've gone into the lower end?
Yes, so in laminates too, our price realization, our value mix improvement is constantly going up. And it may not be completely appropriate to say that other segments we're not doing completely well. Yes, we could do better. So ply, if you see, we just 6 months old in the business, and our realization plywood probably will be comparable to the market leaders. We already are at a nearly 100 crore run rate, and I think number of dealers we've set up, the infra in South India is more or less in place. Maharashtra we just launched. So I think we are winning business in plywood also in the segment we are present, and in the states we are present. Flooring doors clearly are growing well, and we think this will only improve. Veneers, yes, there's a little bit of struggle versus H1 to H1, but versus Q1 numbers have come up. So I think every segment represents different, slightly different challenges, while all go into interior application or certain exterior application. But every segment has different set of competition, different challenges. Yeah.
And Sneha, just to add what sir has said, in the flooring and doors, even though the business is small, but if you see on a half yearly basis, floors has grown by 16.7, nearly 17%, and doors has grown by nearly 40%. And we hope that they will continue to do well in that.
No, that's just commendable, but the fact that, after long years, we are yet to make those kind of EBITDA numbers which we had visualized, and, in terms of laminates is coming through. So that was the comparison I was trying to make.
No, so I think it's a fair comparison to an extent, but clearly I think the other segments, flooring, door, plywood, veneers, we think will also do well and scale up. Especially we think floor door will also become an important segment. Ply also will keep growing. So we don't doubt that those segments will not do well. Sometimes it just takes a bit more time with certain interruptions and challenges because we're also expanding the category. In both flooring and door, we're also creating a market, expanding the category. So there are certain challenges, but it's all moving up the chart there. Veneer, you can say there's a bit of a blip, in H1. Otherwise, last year too, there was a growth in veneers versus FY23. I'm not sure what the number is in front of me, but yes, I get where you're coming from.
Understood, sir. So secondly, on the particle board side, are we on track for Q2FY25 commissioning? And more importantly, we have been hearing that in MDF there is very lack of imports coming in thanks to the container availability and trade issues. How is that faring up in the particle board side, given there used to be a lot of demand which used to be earlier met through imports?
I'm so sorry, sir. Your voice is not coming so clearly. I think the first question was, are we on track for Q3 commissioning? The answer is yes. So we are on track for Q3 commissioning and commercial production in Q3.
And what was the scenario in particle board at this point of time?
So the sense we have that import is not so much right now as board, but maybe imports are coming in as furniture, maybe commercial furniture or other forms of furniture, but not so much. There is some imports coming in, but it's not like an oversupply of chipboard as boards coming in. But as furniture, maybe it's coming in because, as you know, particle board is a large consumption market in the OEMs, and so maybe at times boards don't come in, but it comes in form of a finished good or a semi-finished goods.
Understood. And in terms of realizations, would we have any sense at what are the imported prices currently and where are we looking at our target segment?
So import prices may not be, again, because imports which come in are either just plain boards coming in or they are premium pre-laminated boards coming in. So plain boards are pricing will be similar to imports, but you must keep in mind if you're trying to draw a comparison with MDF, particle boards will be a largely pre-laminated particle board market and not a plain board market, where you'll have probably over 80% of laminated boards and maybe about 20% and lower of plain board eventually. This could change for some time. While in MDF, maybe it's a bit different. So particle boards are sold largely as laminated boards for the OEM segment. So I think you just need to keep that in mind.
May I add to what sir has said? In the particle board, there are a lot more sizes which are in use in comparison to MDF. So there is not an apple-to-apple comparison, or there is an advantage over the guy who's procuring it domestically in comparison to imports.
Understood. That is helpful. Thanks a lot, sir. And all the very best, team. And I wish you all a very happy Diwali.
Thank you. I wish you a happy Diwali too.
Thank you very much. Our next question is from the line of Keshav Lahoti from HDFC Securities. Please go ahead.
Hi, thank you for the opportunity. So firstly, congratulations on great set of number on laminates business side. Just want to know, as laminate plant is already operating at high utilization, don't you feel now the time is right, the company should plan for expansion because if the demand comes up strongly, the company might face capacity constraint?
Yeah. Hi, Ketan. So if you see on the half yearly basis, we are at around 87%. And these plants, and in the past also, we have run that plant more than 100%. It can go 110, 115%. So we believe right now we have enough capacity in terms of that from 87%. Still we have enough capacity as of now we have. And for the expansion, as we have told in the past also, we mentioned in the past also that two of our plants, which is Gujarat plant and the Naidupeta plant, have the space for the brownfield expansion, so which can happen in a much shorter time in comparison to greenfield expansion. So we are keeping a watch on the situation, and as and when a requirement comes, so we can very quickly, within a span of, let's say, at most 3 quarters, we can increase the capacity on a brownfield.
Understood. But what is stopping the company to have a capacity 2 quarters in advance? Is it the balance sheet or what? Because I understand you can operate at 110% utilization, but possibly you might face, capacity constraint for few of the product segment.
That's not the case as of now. So if you see the 87% utilization, which means around 22% is still there, 25% more than what we are operating as of now. So we don't want a situation unnecessarily put the capital and then probably wait for 1 year, 2 years for the utilization. We are keeping a watch, as I mentioned, that on a regular basis in terms of that, and we'll take the decision at an appropriate time.
Understood. Got it. So now coming on the ply segment, normally ply is a new segment, so ideally there is expectation the volume should at least rise sequentially, and this is the first quarter where ply volume have declined sequentially. So the ramp up is possibly, not as expected. So how should we see an earlier some sort of, 40% kind of a utilization you are looking for FY25? So how is that number looking like? And when will it break even?
So it breaks even at 35-40%. That's what we said. We stick to that. Yeah, in this year it is not going on as per the plan in terms of that. So due to n number of reasons in terms of that, first quarter was the excessive heat and all the issues was there. So we have entered into Maharashtra in the Q1, and it's only a quarter since we have entered into Maharashtra, and we are hopeful that should bring the good result in the third and fourth quarter in terms of that. Our overall, on an annual basis, 40% utilization looks to be difficult, and we hope that we will be able to break even in next year.
You said break even in FY25 or next year, sorry.
Yes, next year.
Understood. Got it. That is helpful. I'll come back in queue. Thank you.
Yeah.
Thank you very much. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Udit Gajiwala from Yes Securities. Please go ahead.
Yeah, thank you for taking my question, sir, and congratulations on great set of numbers. So firstly, on the particle boards in next year, FY26, what kind of utilization rate are we aiming for?
So, hi, Udit. So in this quarter, we are planning to have the commercial production, and the next Q4 will be first quarter, and next year will be the first full financial year. We hope to have the near about around 40 to 50% of capacity utilization in next year.
And so 45, 50 is what you had earlier mentioned that we break even at that point. Is that understanding right?
Yes, depending upon what kind of a product mix, but we hope so that we should break even.
Understood. And so given the, export demand, etc., we have grown, definitely we have also gained market share, but this kind of 15 to 17% volume CAGR is something that we should expect that it will continue for coming 2 years?
The volume CAGR is not 15%. In the value, it is, yes, it has grown, but it's difficult to comment in terms of that, whether this CAGR. We will stick to our overall guidance, which we see in terms of that, but intention is the same, which is to take that business in that direction.
Got it. And the 20 or 22% or something, an annual overall growth guidance that you were expecting for 25, is that right?
18 to 20% we have told in the past, and we will stick to that.
Got it, sir. And so lastly, just on the debt part, I mean, I understand that the major debt is pertaining to the particle boards, but do you have any debt repayment schedule which would commence, and if so, then by when will it schedule?
So it is started in this year, and it is being serviced as per the maturity, and as per the plan, it is getting matured. Major portion of it will start from next year on.
Got it, sir. Thank you. I'll come in the queue.
Thank you.
Thank you very much. The next question is from the line of Bhavin Rupani from Investec. Please go ahead.
Yeah, hi sir. Thank you so much for the opportunity. My first question is related to particle boards. Sir, we understand that Merino, which commissioned plant 1 year back, is running at almost 30% utilization. Recently you mentioned that we expect 40 to 50% utilization in next year itself. Now with new capacities from us as well as Century Ply coming up, what gives us confidence to reach 50% in FY26?
I'll take the question. Yeah. So I think CFO mentioned 40 to 50% utilization we should expect in FY26 for particle boards. And I'm not sure what numbers is Merino currently running at, but I think with the alignment of the team, the ability to build a channel, the alignment with the Greenlam brand of laminates, the access to OEMs, architects, IDs, and the price point at which this product is positioned, we think we can ramp up to that extent in the first year of operation, which is after the Q4, that's FY26 financial year, but we start commercial production in this quarter, and next quarter becomes the first one.
Got it, sir. And the second question is related to debt. When do you think we'll have a peak debt in FY25, and what amount?
So this quarter our debt was around 990 odd crore. We had some additional working capital blockade on account of GST something, which is getting. We hopeful that in the next 6 months it should get resolved. So we believe that our net debt should be in the range of around 1,025, between 1,000 to 1,050 crore. And this is in the FY25, and we hope to reduce our debt to come down from next year.
Got it, sir. Thank you so much.
Thank you.
Thank you very much. The next question is from the line of Utkarsh Nopani from Bobcaps. Please go ahead.
Yeah, hi, good evening, sir. So my first question is for the plywood segment. Sir, we are operating the plywood segment at a pretty low utilization, as we are just catering to the premium segment, whereas our major peers are seeing major growth in the economy range category. So as we are operating at suboptimal rate, then why we are not planning to tap the economy range to quickly ramp up our plant?
So I'll take that question first. So on the plywood, while what you're saying is logical and we also kind of understand the story, I think we just are trying to have some patience on and keeping the focus on building the premium end of the plywood, the branded plywood, self-manufactured plywood model. We think it's too early for us to shift gears on that. And as you probably know that we just covered South India at the moment, the 5 states which we started last year, and Maharashtra has just started. We haven't even gone out of 5 states, and we will gradually keep expanding, and adding certain markets. So we think we still need to wait some more time and build that segment. The feedback on ground, while numbers may not, show the picture at the moment of what's happening on ground, the feedback on ground with the kind of focus our teams have on that category, with the quality of products we are getting out of the market, and the effort in the market of building secondary sales, doing secondary demand activity is quite good. So if we should guess right now, I think while the volume objectives might be met in the short term, but I think the medium term, the objectives of building a solid brand, because in that space we think, there is no focused company or brand at this point. People are a bit distracted into multiple things, and if you go lower, you also lower the quality, price points also come down. The kind of equipment, product quality we are throwing at, we think we just need to hold on and have some more patience and settle that part of the market. That's our line of thinking right now. But I don't know, but that's really the line of thinking. And we've just gone out to certain states at the moment. We have the opportunity to go out to more parts of the market before we let it come down to the mid-category pricing product.
Okay. And sir, with this strategy, when can we expect a plant to get ramped up to around, say, 60-70% utilization rate in your viewpoint? Any time frame?
Yeah. So from a plant side, like I said earlier in my comments, that plant side is quite well prepared in terms of the product quality, production, operating parameters. With what we're doing, it's going pretty good. I think we've turned it around quite quickly. So coming to the break-even point comes at about 40% approximately, plus minus utilization. So our sense is hopefully, maybe in about 12 odd months, maybe next year, we should get there. Well, obviously our efforts are, to drive this at the earliest possible. Maybe another year or so is where we can, kind of expect the plant to come to 40% or 50%.
Okay. So my second question is on the laminate segment. So I was just comparing your margin profile versus our major peers. So we see that our major peers' margin has contracted sharply over the past, say, 3 years period, where our margin profile has remained relatively stable. So just wanted to know what we have done so different that our margin profile has not got impacted with a sharp contraction in the margin profile of most of our peers.
So I guess you're talking to our nearest competitor. So I can't say exactly what we've done different. So maybe we've not done too many different things. I think we just kept the focus, and we've always said we've had pricing discipline. We focused on the value mix as well as the volume mix. I think the 2 new plants we started, I said that earlier to Sneha too. Now we have plants in South India, Western India, and North India. 2 plants have already been there for the past. I think the mix of locations, multiple warehouses, and the push in, if you talk to a nearest competitor, maybe they have not grown so much in exports. I think international business for us also has grown. The domestic pieces also has grown. So I think, I'm not sure, what have they done different or we have done different, but so clearly I think we've been focused on, and we've been on a certain journey for a long time. Something new which started in terms of branding and pricing discipline and products, etc. So I think it's a combination of several factors. But I'm not sure exactly what's happened there, but I can say what ourselves.
Okay, so lastly, on the balance sheet part, our net debt to EBITDA ratio has now gone into a vulnerable range of more than 3x. So do we have any plan to raise equity to improve our balance sheet position in near future?
As of now, we don't have any plan of doing so. We believe that FY25 will be the peak debt in terms of that, and as the new project also start commercial production, which will add into EBITDA, and that will help us in terms of bring down this one. We believe the situation will be better in next financial year.
Okay, thanks a lot.
Thank you very much. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Divyanshu Mahavar from Dalal & Broacha Stock Broking Private Limited. Please go ahead.
Thank you for the opportunity. I have just one question that if you look at the particle board capex cost per unit, previously we were at quite a higher around, I think 30,000 per cubic meter. And if you see other MDF projects which have been recently completed, they say it is around 21,000 or range between 21,000 to 25,000. So given that particle board features significantly have a lower realization compared to MDF products, so can we think of that we can clock a low double-digit ROC on this project if we able to utilize the plant at a full capacity utilization?
Again, this in terms of capex per unit of particle board versus MDF. So this will depend upon if we have the apple to apple comparison, which means the equipment should be from the same origin or same source. So if you are comparing European origin equipment with other than European, which can be Chinese or anything else, so then there can be a huge difference between the cost of per unit capex. If you compare on the similar line, then the situation will be different than what you are suggesting. We believe our equipment are from the Germany and Europe, so which has a high capex cost at the initial stage, but the life of these equipments are very high in comparison to other source of equipment, and this brings in lot of operational efficiency at the plant level. We believe initial level, so we have taken that call and invested a bit higher in comparison to, let's say, Chinese or any other equipment, which will help us in a longer term.
Okay. So can we assume the ROC to be range between 15 to 18%, and what kind of realization and EBITDA you are assuming to have from that plant?
So I just want to add here, when you do capex comparisons, it also depends on what are you comparing with what. So ours is a green field, and if we have space after this plant to put one more line in the same plant, and when you do a brownfield, a lot of your incremental costs come down. So I'm not sure what the comparison base is. And I'd also like to add, like I said earlier, the conversation, I think, to Sneha or somebody, that particle boards is largely a laminated program. It's laminated boards which gets sold more than the plain boards. So there is a little additional investment in terms of the impregnation, presses, plates, the kind of machines you run. So I think an apple-to-apple comparison may not be completely fair. We have seen, I must also comment here, we have seen in Europe and certain other markets also where margins of particle board on a steady state, if the right pre-lamination is done, is equal or at times even higher than the MDF business. Obviously, this depends on the RM cost and the mix, etc. But you must just keep this in mind. I think you had another follow-up question.
Follow-up question is that can we assume to have 15 to 18% ROC at defense, and what kind of realization EBITDA you are assuming for that plant? What's your assumption for that what EBITDA and realization we can do?
Yeah. So if you see right now the timber cost is at elevated level. So in terms of realization cost, this will vary from the plain to prelam, and in the prelam also what kind of a product which you are selling. This can range from 25,000 to 28,000 and even 30,000 also, depending upon what prelam product you are selling. And in terms of EBITDA level, it can at optimal level it can range between 20 to 24%. And your next question was in terms of ROC. At this moment, because of the timber prices are on the higher side, so this looks lower. But on a stable timber prices, so then the ROC can be in between 16 to 18 to 20%.
Okay, sir. Thank you, sir, and wishing you a very happy Diwali to all the management team.
Thank you. Yeah, thank you, and wish you the same.
Thank you very much. The next question is from the line of Nitin Shakder from Green Capital Single Family Office. Please go ahead.
Hi, good afternoon. This is Nitin Shakder from the Green Capital Single Family Office. My one question to the management is, in my conversations as an investor with some of the companies, we've seen that there's some increase in raw material costs like paper and other raw material, which is used in the production of boards. And
your voice is not so clear. Sir, your voice is not so clear, please, once again.
Hello?
Yeah, please go ahead.
Correct. So in my conversations with some of the companies as an investor, there's been a increase in raw material costs for, let's say, paper and other materials.
Your voice is still not audible. Please, can you use your handset and be clearer when you ask the question?
Okay. Hello, am I clear now?
Yes, sir. Please go ahead.
Yeah, hi, good afternoon. In some of my conversations as an investor with a couple of companies, there's been an indication that there's been an increase in raw material costs like paper, and obviously we're aware of international export high freight costs. So is that were to be correct? Is there anything that the company is doing to offset the high raw material costs, and when do you expect the situation to sort of normalize towards more lesser costs? Thanks.
So we are assuming this question is related to the laminates business, where we buy and consume a lot of paper. So we said that earlier that in September. So firstly, yes, certain grade of kraft paper, certain costs have gone up. There has been a small increase in certain deco paper costs, some chemicals. But by and large, there's been some increase, some decrease in the costs. Nothing of very major significance, as can be seen in our gross margins. While having said that, we have taken a small increase in the domestic market in September, about 2.5 to 3%. We mentioned that too. On the freight part, on the export freight, I think we said that earlier in the conversations. We have a minimum, cost of the sea freight which we bear, beyond which the surcharge, is passed on to the customers for the incremental freight. That incremental freight surcharge has softened a bit, which was also mentioned earlier, from September onwards. So this is the sense we have. If Ashok wants to add something to this.
Okay, so just as a follow-up, so what I'm getting to understand is that on the laminates business, you're saying that the cost increase is not that high to have a significant impact on the margins. Would that be correct?
You could say that. Like we said, domestic, we already did the increase of the cost. Yes, there is some increase, but with increased production, better value mix, you can kind of offset that to a certain extent. We could say that, yes.
Okay, thank you, and happy Diwali to the Greenlam family.
Thank you.
Thank you very much. We would like to remind the participants they may press star and 1 at this time to ask a question. Participants who wish to ask a question may press star and 1 at this time. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thank you everyone for taking out the time and joining the call today. In case you have any further query, you can get in touch with us or the SG, our investor relations advisor. Thank you, and wish you a happy Diwali to all of you.
Thank you everyone. Wishing everyone a very happy Diwali.
Thank you everyone. Wish you all a very happy Diwali.
Thank you so much. On behalf of Greenlam Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.